But as markets grow in scale and complexity, they also become more closely connected to global developments. And that brings us to the changing landscape in which today's market operates. The environment in which our markets function is evolving rapidly. One important shift is economic fragmentation. Trade corridors are changing, supply chains are being restructured, and investment flows are responding to these shifts. Another major transformation is driven by technology. Algorithmic trading, artificial intelligence, and advanced data analytics are accelerating the speed at which markets operate. Liquidity conditions are also becoming more episodic. Global capital flows can move quickly across geographies. But perhaps the most striking change is the velocity of information. News travels quickly, opinions travel even faster, and most importantly, markets today react almost instantly to the narratives. And therefore, the question before policymakers and market participants alike is, how do we ensure that speed does not compromise stability? In recent years, SEBI has undertaken a number of initiatives to strengthen the efficiency of markets ecosystem. We have reduced the settlement cycle to lower the settlement risk and improve operational efficiency across the market. To strengthen debt ecosystem, thresholds from electronic book mechanism have been reduced, and the scope of EBP platforms has been extended to include REITs and InvITs. In a measure aimed at further facilitating capital raising and easing minimum public offer requirements for larger issuers, the central government just yesterday notified changes to SCR rules. These changes allow companies to list with different levels of initial public float, consistent with adequate liquidity, and provide a longer phased timeline to achieve minimum public shareholding requirement of 25%. We have strengthened the AIF ecosystem with lower thresholds for LVFs, large value funds, and strengthened the framework for accredited investors. For global investors, our effort has been to make access simpler and more seamless. Measures such as simpler regulations for IGB-only funds, introduction of common contract note, Swagat FI framework, relaxed block windows, all are aimed at enhancing ease of doing business and bringing in operational efficiency. Another area of our focus is how can we increase investor participation. To improve the investor access in debt market, we have reduced the investment threshold for privately placed bonds. Issuers are permitted to offer incentives in public issues of debt securities. To promote greater participation in mutual funds, distributor incentive structures have been revised. For NRIs, certain KYC requirements have been eased, facilitating smoother participation in Indian markets. Our efforts are underway to further simplify the investor onboarding processes by enabling enhanced information sharing through KRAs.